Hello students, you are welcome back to Q&A on bank reconciliation statement. So here we are going to look at practical questions on bank reconciliation statement so that we clarify our understandings right from the beginning that we started this topic or this course, right? But before we look at the question and answers, I want to use some few minutes so that we can discuss the reasons why we prepare bank reconciliation statement and the reason why the customer prepare what a bank reconciliation statement. So as you can see on the screen, bank reconciliation statements are prepared on a number of reasons. First, to reconcile the cash book and the bank statement balances, you know already, to ensure that the balance on the cash book agrees with that of the bank statement. Very simple. To reconcile any item in the cash book which is not entered or included in the bank statement. Likewise, to ensure that an amount of individual payments and receipts on the bank statement agrees with the items in the cash book. Then also it serves as a basis for making corrections in the bank statement or the cash book. Then it's also to identify items in the bank statement which are not included in the cash book and vice versa. So these are the reasons why we prepare a bank reconciliation statement. So let's zoom into taking our first question on bank reconciliation statement. So this is our first question. All right, so this is how the question goes. The bank column in the cash book of Camara for the month of April 2005 and the bank statements are as follows. So you see the cash book, we have the date particulars and then currency. At the debit side, then the credit side, you have date particulars, the check number, and then currency. Then the amount of various transactions are there. Then the bank statement too, you have the date, the details. Then you have column for the debit and then column for credit, and then the balance as well, and the currencies being shown as appropriately where it should be placed. So here, then additional information. The correct figure for additional information 1, that's A. The correct figure for check number 103 is 307,000. The D is Dalasi instead of 370,000 Dalasi. That check number in the cash book 103 is at the credit side, because if you are checking the debit side, then 103 will be at the credit side of the cash book. It should have been 307 in the cash book. The one recording is actually recorded 370. So it's an error. We will correct that when we start with the questions, when we start with solving it. Then B, the direct debit of 250 was a monthly subscription payment made on behalf of Samara, another customer of the bank, but was debited in error to Camara's account. So you see, this is a wrong debit. A wrong, because they bear similar name. When you start to read the errors, correction of errors, you understand these similar names as we are talking about. But that's not the case we are dealing with. So here we are required to update the cash book to show the correct cash book balance as at 30th April 2005. Then B, that's prepare a bank reconciliation statement as at 30th April 2005. So that's the question that we have been given. So we are going to go through how to solve. But before, we are going to go by the requirement. First, we have to prepare the updated cash book, then follow suit to the preparation of the bank reconciliation statement. So let's get onto it. So this is my updated cash book. So from the question, so let's get into the question. Let's get back to the question again. Okay, so in the question, you can see that for the cash book side, you can see that we're having a balance that first May balance BF, that's brought forward, of 298,000. But remember, they are in thousand. That's why you see the Dalasi at the top of the updated cash book having 3 zeros on top of the or close to the currency, meaning that they are in thousands. All right. So we're having a balance of 298. Balance of 298. Dalasi, that is 298,000. So that was the balance brought forward. So immediately you see the balance brought forward, you're going to record this as an opening balance for the updated cash book. So you see where it is positioned at the debit side. So meaning you're going to record it at the debit side of the updated cash book. So you're going to record balance brought forward. You record. By conversion, you can shorten your balance in this form, right? BAL, then you have brought forward, meaning brought forward, you are bringing to the next period. So here becomes what? 298. Okay. All right. So once we recorded that, since we are into updated cash book, we are interested in all items that will update the cash so that we get a correct balance in the updated cash book. So we are saying the updated cash book are basically errors that was committed by the customer, that is the omissions, who was not recorded as at the time the bank statement was. So we are going to look at all items in the bank statement, okay, all items in the bank statement that cannot be found on the cash book, the cash book of the Camara. We are going to look at all the items on the bank statement that cannot be found on the cash book of the Camara. I hope that is clear. It is only on the bank statement, but it cannot be found on the cash book, not the opposite. Okay, so just be with me. So now, moving on to the bank statement, we clearly see we have, first of all, we have so we clearly see that on the bank statement, we have the balance and we have the standing order. So you see the standing order that the debit side of the bank statement, but cannot be found on either of the cash book side. So once at the debit side of the bank statement, meaning that when it comes to our updated cash book, going to be found at the credit side. We have discussed all these things as an omissions, the errors that the customer couldn't be able to record it because as at the time the bank statement was received, he wasn't aware of this errors. So standing order is one of them. So we're going to, of course, is at the debit side of the bank statement. We're going to record it. Correspondingly should be at the credit side of the bank's, credit side of the updated cash book. So let's take note of that. So I'm going to record standing order of what? 140. Standing order of what? 140. All right. Then from the standing order, we come to a credit, which was 740. But let's check the cash book. Can we see 740 at the debit side? Yes, it means it was a check. It was not part of our item that will go to the cash book. Then check number 1, 101, 102 won't come there. Then we are having an investment interest, which is at the credit side of what? Our bank statement, but cannot be found on the debit side of the cash book. So meaning that it was an investment that we earned. It's like, can be more like a dividend received. Okay, so if the dividend received, then it's increasing our cash book balance. We need to add it. Since at the credit side of the bank statement, the corresponding entry will be at the debit side of the updated cash book. So investment, I record it. Investment, the investment interest, which is what? 772. Okay, that's investment interest. Then you come to check, cannot be found on there. No. Then another check, no. So you come to direct debit, which is 250 what? 1,000. But let's come to the additional information A. They are saying that, so let's get to it. They are saying that the correct figure for check number, okay, that was check, so won't come there. Then B, they're saying the direct debit of 250 was a monthly subscription made on behalf of Samara. So here it is what? A wrong word. debit that is made by the bank and not for the customer. You're saying that all adjustment I'm going to make the updated cash book should be an error that the customer fail not what to record. Okay, that's what is coming to the updated what cash book and not error made by the bank. So it won't be part. All right. Then we are having a bank charges, which is also at the. We are also having a bank charges, which is at the debit side of the bank statement, but cannot be found at the credit side of the bank. So here it was an interest that they charge to the customer. So it should reduce the customer's what account. I mean, his credit balance should reduce it. But on knowing to the customer, as at the time the statement was received, wasn't aware of these bank charges, so you need to update it by recording it at the credit side. The corresponding to be at the credit side. So bank charges. So these are the errors that the customer should have rectified before it occurred. Okay, so here we're going to record here as what 54,000, but we are not done. Let's come back to the additional information. They are saying that the correct figure for check 103, which is on check 103, which is on 10th April on the question, as you can see, 103, right? 103 should have is what 300 and what is 207,000 instead of what 370,000. So they are saying that instead of the correct figure that should be exist for check 103 should be $307,000 and not the $370,000 that is found in the cash book. So meaning that the $370,000 found in the cash book is an error. It should have rather recorded what 307,000 instead of what 370,000. So since it's an error, meaning it has increased the credit side of the cash book. So we need to reduce it. We need to reduce so that we get the original figure should be at the credit side. So how do you do that? We do that by what? Taking the difference between what it should have been what been recorded and what it have actually what been recorded. Okay. So that's what we're going to look out for. What it should have been what done and what it has been done. We take the difference and we are good to go. So that difference, since it was at the credit side, for us to reduce that balance at the credit side, we are going to what debit the difference at the debit side so that it reduce that balance at the credit side. Okay, so that's how it goes. So here we're going to write here as an error, right? Error made. So this error will be as a result of the 370 taking away your 307, which should have been recorded at the credit side. Okay, so the difference is going to give you what 63,000 as at the debit side. So once you find a debit side, going to be cancelled the 370 that we recorded, and they're going to be reduced it by 63 so that we get what 307 at the credit side of the cash book. So that should be the correct figure that should have been exist. Okay, so that's how it should be. So it's an error. So we have corrected it by debiting it so that it cancel or reduce it, or reduce the 63 that we have increased at the credit side. So that's how it should be. So I think that's all for the bank statement and the cash book with respect to the updated what cash book. So that is also, let's balance the account and let's see. All right, so with the debit, when I added, I had what the debit side, I had 1,133, 1,133, right? And the credit side, I had, so the credit side is going to be the same thing. Remember here, the debit side was greater than the credit side. That's why we're having that. So take note of that. So here to the same thing, 1,100 and what 133. So I'll take the difference, the summation of these two from this, and that difference should be the balance that should carry down to the next what financial period or financial month. So here the difference was When I type, I had what? When I punch, I had 939. 939. So that will be a balance carried down. So you're going to bring it to the next period, which will be a balance what brought down. So balance brought down should be a balance brought down. Should be a balance brought down. Should be a balance brought down, which is 939. 939,000 as your balance brought down. So this is how the adjusted cash book will be. This should have been the figure that should have been in the cash book. I should have tallied with the bank statement that when it was sent. All right. So that is that for the updated cash. So let's talk about